Good evening, everyone. It gives me immense pleasure to welcome all presidents, Rotarians, and family to this multi-district, multi-club speaker session today. It is wonderful to see 3 Rotary districts coming together for this meeting. Before we get started, I would like to take a moment to share my appreciation for everyone for lining up their schedules across time zones this way. I think Mauritius is like hour and a half difference time zone, I think. So thank you, Lena and others for joining in and making this speaker session special. This session will provide us with valuable insights, information on a topic that is essential to all of us. And I cannot think of anyone more appropriate than Rotarian Sandeep Shetty for this. I hope we all will make the most of this opportunity to learn and grow. And I'm excited and look forward to it. Once again, welcome all.
First of all, thank you, my mother club, for inviting us to be part of the event today. We're very honored and very happy to introduce our dear friend Sandeep Shetty on this meeting. It is indeed a pleasure to introduce a visionary whose work addresses questions many of us quietly face. The final decision in intergenerational planning. It's a very important thing. Growing up in a business community, Mr. Shetty, he saw firsthand how hard work and relationships create success. But what truly set him apart was his insight into a rarely discussed moment, the transition of wealth, values, and responsibility across generations. He reminds us that the building wealth is only half the story. The true legacy lies in the decisions we make to ensure the success lives on with clarity, continuity, and trust. Whether sharing ideas within Rotary circles, advising families, or engaging in meaningful conversations over tea, he brings wisdom, warmth, and purpose to every exchange. Today, he challenges us to reflect not just on what we leave behind, but how we leave it. Please welcome a leader who helps others shape their legacy on their terms. Rotarian Sandeep N. Shetty, speaking on Your Legacy, Your Terms, the Essence of Intergenerational Planning.
Yeah, thank you, Rampriya, for that wonderful introduction. Before I start with my presentation, I would like to give a clarification on what is estate planning. I've used the word intergenerational planning. The actual word is estate planning. Many people get confused if I say estate because they think it's all about real estate. What is estate? I'm going to define now. Estate is whatever you own, and whatever you own after you die is a part of your estate. Transferring that asset from one generation to multiple generation in a right structure with the least tax implication is called estate planning or intergenerational planning. Transferring happens as per your letter of wishes, not as per me. It is as per your letter of wishes. That's why today's topic is your legacy, your term. I want to keep this session as much as I can do as an interactive session. I can see only the people who switch on their videos on the top. So I would keep interacting with the people who those people's video is on. Okay, Abhilasha, I would like to ask you a question.
Sure.
Yeah, just imagine you're no more part of the estate, or else you can't take any decision of your estate. That is whatever you own. What will happen to your estate? Just imagine and tell me what will happen to your business, assets, everything. What will happen if you're no more, or you become incapable to handle those assets?
Will they not go to the family? I would assume they would go to the family.
Okay, then?
And the family takes care of it.
Okay. So if you have multiple heirs, what will happen? Your bank account, your investments, your companies, what will happen to all those assets? Immediately it will go to your heirs?
I have no idea, to be really frank. I mean, I'm assuming they will go to the heirs, but will they go just directly, or it will involve something? I don't know.
Okay, Mr. Amal, would you like to give it a try? You can unmute yourself.
Yes, thank you. I'm talking on the perspective of Mauritius. Your estate, as you stated, half will go to my spouse, and half will be divided for my children. in the half of my children, my wife, my spouse will get half again. She will get around 70% of the estate in Mauritius. This is a law, according to law of Mauritius.
Okay, great. Both of you said it rightly. Even if you don't do the estate plan, the government has done the estate planning for you. Your assets would be divided and passed on to the next generation as per the government. It may not be as per your intention, it is as per the government. Say, for example, you want to pass some assets to the charity or to your friend, but the government doesn't allow you to pass that. It will go only to your the first circle of the blood related.
Correct.
If you don't define it properly, there would be a lot of tax consequences, and your heirs would fight for their rights. And it goes to the probate, and it takes a lot of time to inherit.
Yes,
the thing is
some people take some time, and you must be civilly married in Mauritius. If you married, you must register the wedding with the government first, and then your spouse will be considered as your asset can be given to your spouse. But you must marry as per the government legislation.
Yes, thank you, Mr. Raman. Okay, so what is the benefits of estate planning? It will protect your minor children. Then you can streamline the inheritance, including your business succession planning, and will optimize your net worth efficiency. It will help you to plan your charitable goals. And if your kids or the parents or anyone in your family is disabled, who is going to take care of that person? So, for example, your kid is in the US and no one is there to take care of you in your old age. Who is going to take care of you? The trust will take care of you. The estate planning will take care of you. And also it ensures there is a continuous business continuity. So these are the major 6 benefits of estate planning. The biggest concern or biggest mistake in any estate is almost all the rich people, they're all asset rich and liquid poor. You may be having a $10 million as assets, but you may not be having even $10,000 as an income every year, or even $50,000 every year. What does that say? All the people, including business owners and rich people, they're very poor at cash flow management. That leads to this liquid poor and asset rich. They become asset rich not because they're accumulating more wealth. It is because of the inflation their asset is going up, not they're actively acquiring. My job as a estate planner is to create a consistent cash flow for your future generation and also for you in the estate planning. That is the major role of the estate planner as well as the financial advisor in this role. Many people think that in the estate planning, there are only legal and tax aspects are there. No, there are 7 aspects of them. One is legal, tax, inheritance, charity, income planning, retirement planning, and asset transfer. If you have all the 7 aspects in your estate planning, then only your asset planning is complete. So let's come to the legal. Many people know what is will. Will is executed after we pass away. One thing I want to let you all of you know that there is a living trust also, the living will. What living will does is it would be executed when you are alive, but you can't take any decision because of your inability to think or move. Say, for example, you're in the coma. What will happen to your assets? Who's going to operate your bank account? Who's going to make a decision behalf of you on the business? That is a living will.
That is a spouse or the children.
They can't operate, they can't sign your signature.
Yeah, but then if you make them nominee, if you nominate them for your assets, your bank balance, bank account
Gets your assets once you die, not when you are alive.
In Mauritius,
What we give is a power of attorney. We'll give special power of attorney. We'll give to the lawyers, and we say that for my health issues, this is the person is responsible. My financials, this is the person is the responsible. If you give the general power of attorney for all the issues, only one person is responsible. That is what we call it as a living trust. Okay, and then the trust. In the trust, we have 2 types of trust. One is a charitable trust and one is a private trust. As you know, in the charitable trust, you can do the charities. In the private trust, you can do all your business activities and move all your assets to the trust. Why do the people move their assets to the trust? What is the single motive agenda? Can anyone of us guess?
To avoid probate.
Yes, to avoid probate is the one, but the most interesting reason as per the survey, what it says is, when you move your assets to the trust, you're going to divide the title and ownership, title and control. So for example, I move my building or a property to the trust. Who is the owner of the property? The trust. Who is controlling that property? Me. And Succession Act doesn't applicable to the trust. That's why it doesn't go under the probate. This is the main reason why people move their assets to the trust. In the charitable trust also, we have two types of trust. One is a operating trust and non-operating trust. Operating trust means you will operate everything end to end, raising the funds or infusing the funds from your private trust to the charitable trust, identifying the beneficiaries, managing end to end. Non-operating trust is you will map your vision to the nearest matching NGOs like a Rotary. You want to educate a girl child, go to the Rotary and fund your wealth through the trust, your own private charitable trust, and fund it to the Rotary. They will operate it. This will reduce your administration cost. We have two types of trust. And many people use even foundation in India, but in India, we don't have any foundation. We have only charitable trust. In US, we have a foundation. What is the difference between foundation and charity is the foundation, you cannot sue that foundation. In the charitable trust, you can sue the trustees. That is the major difference. Then comes to the tax planning. In the estate planning, we do the tax optimization. The purpose of tax optimization is to whatever the money we release by doing the tax planning, we'll move that money to your retirement planning. That is the whole objective of tax planning here. This is quite interesting. Inheritance. Last month, I met a very potential client. He owns 6 properties in Bangalore, that is Karnataka, India. He said, Sandeep, I planned such a way that my kids is going to inherit only the income, not my property. I said, it is fantastic. How do you ensure that your kids won't sell your assets? He said, Sandeep, I made a trust. In the trust deed, I've clearly mentioned that my kids should not sell my assets. They have rights only to consume the income. I said, it's fantastic. How about tax planning? He said, I have a accountant. He knows how to calculate the income, expense of the property and do the tax planning. That is also taking care of it. I said, interesting. Then he asked me, Sandeep, then what else you can do it for me? I told him, whatever the assets, you hold it for very long time, that reduces its value. Even the real estate, if you hold the real estate for 20, 30, 50 years, what will happen? It depreciates, isn't it? Who is going to fund if real estate requires repair, renovation, and flipping the property? Do you think your kids is going to pay? No. It is a one way. Kids are not interested because their aspirations are different. Their lifestyle is different. They want just a rental yields, that's it. I will plan for it. He said, Sandeep, no one has told me this. Even his accountant and the lawyer, not even found it is a problematic. This is where the estate planners come into the picture. So every 3-5 years, we need to repair the property. Every 15-20 years, we need to renovate the property. Every 40-50 years, we need to flip the property. You can't, in the property, we have two things. The bigger the property, the yield is less. Rental yield is less. And the oldest is the property, aged property, the rental yields comes down. So every 3 to 5 years is to keep repairing to maintain the real estate value and keep getting the good tenant. Isn't it? So what advice I gave to him is keep 10% of his rental yields for the repair and renovation and 10% keep aside for the flipping the property once it gets aged. This is what we need to look into it. And I'm going to give another case study. Anyone who would like to interact with me, you can switch on your camera and you can please feel free to interact. Abhilasha.
Yes.
Let's have one case study. I want to interact with you.
Me? Okay, sure.
Yeah. Say, for example, you have a property worth of $10 million.
Okay.
And you have one son and one daughter. Okay. And the son has only one son. Daughter has one son and daughter. You have 2 kids and 3 grandchildren.
Okay.
So how much your son and daughter will get? Your inheritance, $5 million, $5 million of the property?
Yes.
And how much your grandson, the son's son will get? $5 million?
Because it's just one. Yes.
Son's
Yeah.
one will inherit $5 million?
Yeah. Yeah.
And how much your daughter's daughter inherit? $2.5 million?
Yes. And the
And
son
how
also,
much
right?
your daughter's son will inherit? $2.5 million?
2.5.
Okay.
Assuming that's what she wants to give. I mean, isn't
No.
it in end of the day her choice, the mother's choice?
Correct. And as per the Succession Act, they will get equally, 50-50%
Equal.
they get it.
Yeah.
My question for you, Abhilasha, is, do you love all your grandchildren equally?
Do I know?
Do you love your all
Okay.
grandchildren equally? Yes.
I don't have them yet, but I am assuming I would love them equally. Yeah.
Yes. Then your daughter's daughter will come to you, Grandma, if you love all of us equally, why not blessings equally?
But blessing is equal, right?
For her cousin, you are giving $5 million, and for her brother, you are giving $2.5 million, and for her, you
I
are
gave
giving
to the
$2.5 million.
parents. I gave to their parents, right? Half.
But
And the
you love all
parents
your
had to work.
grandchildren equally, right?
I love both my children equally, so I gave equally. Now they have to give equally of what they have, right?
That you can decide in the estate planning. One is, if you don't plan it, we'll give it like a $5 million, $2.5 million. If you want it in that way, we'll give it. But if you want your own wealth to be distributed equally, like a 1/3, 1/3, 1/3, that is $3.3 million, $3.3 million, $3.3 million. That way also we can do it. So in certain families, what happens is, to get more inheritance from their parents or grandparents, they'll have more kids. They get more inheritance. So in the inheritance, we'll equalize your wealth at every generation equally. So none of them feel you have not treated them fairly. Equalization is the key in the inheritance. Okay. I'm going to tell one more thing. Let's assume one software engineer is the owner of one company, software company. He has one wife and 2 kids, 3 years old and 5 years old kids. As soon as they're coming from the shopping, as soon they open the gate to enter their home, the home gets fire. What is the first thing the software engineer will get it from that house? His laptop? Because all the algorithms, software coding is there in his pen drive or drive, laptop. And what does the wife do? Jewelry, isn't it? And what does the kids do? Toys? Yes, toys. So in the estate planning, it is not what you're going to give. It's about, for each person, they value different things differently. It is about what your kids want, you need to give that. It's not about what you want to give. It's about what they want to give, what they want from you. That is more important. And also, it is not what you give. How you give, it matters a lot. Even if you divide the property and everything equally, and if your kids feel they've not treated fairly, again, one more Ramayana Mahabharata happens. Okay, I'll move to the, so in this, we need to consider who is the beneficiary, how long they need to hold on to your assets. You want to give only the income or asset. At what instances they need to sell the asset if they are not able to generate income. All those points we'll consider while we do the inheritance planning. Charity. The 4th point is charity. Can anyone tell me what is the biggest issue in charity? As a Rotarians, as a company owners, what is the biggest challenges we have in charity? Uttam, would you like to say something? What is the biggest challenge in the Rotary or any family we have in the charity while doing charity?
We can't hear Uttam. Hi Uttam. He's unmuted, but can't hear him.
Okay, Miss Lena, would you like to give it a try? What is the biggest problem in the charity?
It's actually how to deal with assets.
No, while doing the charity, what is the biggest challenges we have as a Rotary Club or as a family, as a company? What is the biggest challenge? The biggest challenge is raising funds for any charitable organization for that matter. Why means we have only this much of funds with us. We have so much of beneficiaries. Even if you raise $100 billion, it is very small because the beneficiaries are very huge. So that's why we always go for the sustainable charity. Say, for example, you want to feed 500 students a meal every day, but you have a funds only to feed 100 people. Even if you raise funds, you may feed another 50 more, that's all. You can't feed 500 people. It's impossible. So instead of that 100, even if we give it for only 50 people, it should be sustainable for a long time. That's why if you see even in the Rotary, we always go for the sustainable projects. Even the Rotary doesn't want to impact each and every person on the planet. We want to impact few people, but it is sustainable every year as frequently as possible. That is the best charity, what we can do for. In the charity, many big business owners use charity for the marketing purpose also. It's a known fact. Why, I'll tell you. If I buy a Mercedes and put it on social media, I bought a new Mercedes at $0.5 million, I may get 30-50 likes. But if I put a story, nicely crafted story, today I feeded food for 1,000 people, I get 1,000 likes. Charity is the most effective and cheap marketing for any company. There is no better marketing than doing the charity in a good sense. So any company in the, as per the recent studies, what it says is if any company, if they do not include the society at large in their CSR fund, and if society believes that they're not supporting the people around them, that company cannot last for a long time. Even we have a Tata's and Reliance in India. Who has done more charitable work? Tata. I have few friends, they say that I buy only Tata cars because Tata has done so many things for the India than the Reliance. That gets you the loyalty also to the brand. In the charity, one is you have money, you don't know how to do the charity, I can help you with that. Another one is you don't have money, but you have an intention to do the charity. We can accumulate a few dollars every month and we can do the charity once it becomes a sustainable fund. So in the charity, we have three types of charity. One is day-to-day charity. Every day or every month or every quarterly, we need to donate. For that, we need to plan. Another one is a medium term, that is 3 to 5 years. And another one is a legacy planning. As long as you are alive and even after you pass away, we can create a sustainable fund so that you can keep donating to the Rotary or your own favorite organization. Abhilasham, would you like to get recognized every year or once in a while? Everyone loves to get recognized every year, right?
Yeah.
Even that's why, even the Rotary, if you see at the TRF level, we want people to donate every year. Not just give one-time big money, lump sum amount and forget it. We don't like that. We want people to donate us every time. And when you create a sustainable charity planning, charity imposes the humbleness in your kids as well. The before Rotarian and after Rotarian, I'll give my experience. After I became Rotarian, I became more humble because we'll go to the underprivileged people and we'll serve them. That makes us feel that how blessed we are. That keeps us humble. Charity is also a way to keep your kids very humble, even if they are rich. This is my favorite topic, retirement. In the retirement, the objective of retirement planning in estate is to create the retirement planning outside of your estate. Why I'm going to tell you. So, for example, you have created a business and handed it over to your kids, and your children are running the business. Whenever you want money, you keep withdrawing the money from your business. And if the economy is down, what does your children tell you? Dad, why are you spending? You may say that it's my money, I built and spend it wherever I want, but your children may not like it, isn't it? Or else even you don't feel good. I built this business. I built a lot of assets, investments, so that my kids can inherit. And if you keep consuming that wealth, you may not feel good. Oh, this wealth should have gone to my kids. I'm consuming it. You may feel bad. My dad taught me this. He said, Sandeep, whatever I have built, it is for you. Whatever I built and whatever I have, it is for you. And if you want some more, please come back to me. I'll give that. That is the power. First time I didn't understand. What is he saying? Whatever he has, it is mine. Then how can he give me more? So he has created a pension for himself. Every year, every month he gets a 2 lakhs, the pension. We have created outside the estate, outside my business. We are builders too. We build apartments and we are into real estate. He has built his retirement planning outside the estate. He has transferred all these businesses to me. That is the power he has. I request everyone to create your retirement plan outside of your estate. So any questions on this? I want one more person for interaction. Who is there on online? Mr. Vicky? Vivek, are you there?
You are muted.
Good evening, Sandeep.
Yeah, good evening, sir. Sir, I'm going to ask you a few questions on the retirement.
No.
Sir, I'm going to give you 5 lakhs this month. What are you going to do with that?
Me?
Yeah.
Might be I'll give a part of it to charity for some good work.
Okay.
Some to my children.
Okay.
Nothing for me. I don't need anything.
Okay. Next month I'll give you 5 lakhs. What are you going to do with that?
I don't feel like accumulating wealth.
But I'm giving you next month also. What are you going to do with that?
Wisely invest somewhere.
On the third month also I'm going to give you. What are you going to do with that?
It's a recurring way of where you want to invest your money. You have to decide yourself what you want to do with that money. Either you want to spend it, either you want to use it for a cause, or you want to use it for your family.
Every month for the next 10 years, as long as you're alive, and they'll keep giving you 5 lakhs every month. What do you do?
Create a fund, accumulation of that wealth. Either it should be put to proper use, whichever way you give it to me. I think so. You should be intelligent enough to know where exactly you need these funds, at what time, and where you need it. Might be you may need it for your business, might be you need it for your family, might be for your education, for your children, might be for your health issues.
But I'm keep giving you the money every month. Okay, I'll come to the point now. My dear friends, if you're wealthy, you are not retired. If you're rich, it doesn't mean that you are retired. What is retirement means? You need to have only one worry. Like how Amar sir was telling, I'll plan for this, I'm going to think where to spend money. In the retirement, you need to have only one worry. What is that? Is where to spend money. That's it.
That's what I'm doing.
Yes, that is called retirement. And what is retirement planning? Means planning for a consistent cash flow is called retirement plan. Whether retire is a French word, that means stop working or optional to work. So this is what we create in the retirement for you.
Well said, Sandeep. Planning is a must for every man's or a woman's earning today. Without planning, you cannot be a successful person.
Yes. Thank you, Musa. Seeing how to 1 second. I lost it. Okay. Next comes to the income transfer. I met recently a client. He said, Sandeep, I am evaluating a deal. A business owner wants to sell his business that is worth of 100 crores, but it is valued at only at 60 crores now. Can I buy it? I told him, yes, sir. Why can't you? Yes. Why are you thinking? You can just buy it and build that asset, and you can sell that asset for 100 or 150 crores in another 2-3 years, and you can flip it and make a lot of money. What is stopping you from buying that? He told me, Sandeep, we don't buy the assets for the discount. We buy the business for the cash flow, what it is generating. He told me that business cash flow consistently has reduced for last 3 years. Then I realized, if you see a tree, which is more important, tree or roots? Which is more important? Anyone?
Roots are important.
Perfect. Yes, correct. If I cut the top of the tree, if roots are still there, the tree would regrow and start bearing the fruits. If I cut off the roots, even the mightiest tree on the earth will fall down eventually. I compare tree as a assets and income as a roots. What is said is right. If income is weak, that business is not generating enough cash flow. That means even after he buys that asset or business, it will fall down immediately. Isn't it? That is the power of income. Are we working for income or asset? Income. Our employees are working for income or asset? It is income. Whether the government is working for income or assets, it's income. The entire economy runs on only one variable, that is called income. That is the power of income. So in the income planning, we preserve the income, we build a strategy to accumulate more income and also transferring that income to the next generation. I'm going to give one more case study now. Uttamji, whether your microphone is working? No, I'm unable to hear. Bharat Puvaya, would you like to come online? Any other person? Okay, Mr. Anmal, could you please unmute yourself? Mr. Amal, sir, on the income, I would like
Yes.
to share a case study with you. Say, for example,
Yes.
you have a $10 million property. That one you want to transfer to the next generation, or else $0.5 million every year for the next generation. Which one would you like to choose? One is
$5 million for the next
$10
generation.
million property, one-time settlement to the next generation, or else $0.5 million every year as long as they live. Which one would you like to give to the next generation?
Second option, the 5 million for the next
0.5 million.
generation.
Why?
Because it is a constant cash flow.
Yeah.
And
but it is just a 5%.
this,
and if you give me $10 million, at least I can generate 20% of it. 10 to 20% easily I can generate, no? 1 or 2 million I can generate every year.
it is not guaranteed that you will generate this 20% in the future. We don't know what will happen in the future.
True. That is one side, technical answer. I'm going to give you the behavioral answer for this. If you give even $20 million and just a $0.5 million, if you give a $20 million asset also to your kids, after a few years or else immediately they sell your assets because their aspiration is different. Their lifestyle is different. To fund that aspiration, they want a gift of cash, not a gift of kind.
That's right.
More than 95% of the cases, they sell your assets.
You will sell the asset.
Because they want to settle in US, they don't want to be in Mauritius or in India, they sell their assets. Or maybe after the fire sale, 20, 30, 40% discount they give, they want immediate cash. That's it. So the best way to give the next generation is income. Because even if you give a $0.5 million, what will happen? If they don't know how to manage that income, if they lose it, it is fine. Maybe second year, even if they lose it, it is fine. At least on the fourth year, fifth year, they'll start learning how to manage money.
That's true.
They need some time to learn to manage your assets, your liabilities, your net worth, your business. They need a time frame. If you give asset, they sell it. No matter, even the guarantee is just a $0.2 million. I still prefer to give $0.25 million. But if you want to give a asset, we plan it as per your letter of wishes, not as per mine. That is the power of distributing the income. Okay, next one is the asset. For the next generation, Mr. Amal, would you like to transfer asset or net worth to the next generation? What do we transfer generally? Asset or net worth?
Assets.
Do we transfer asset or net worth to the next generation?
Most probably net worth is better. But actually we transfer asset.
We transfer the net worth to the next generation. But what we are supposed to transfer, it is an asset. What is net worth? Asset minus liability is a net worth. Say, for example, your business has a $10 million revenue and $5 million assets and $2 million liability. As soon as we pass away, we are going to give the net worth to our kids. And they may take 5 years, 10 years to repay that $2 million liability. So if your business has a liability, it's not an asset. It's a net worth, isn't it?
Yes, yes.
So when we transfer our asset to the next generation, we need to inform our kids what we are doing. We need to instruct them how to manage the wealth. And we need to inspire them why we have built the wealth and what they need to do it. And also we need to give them the income so that they can clear off that loan and transfer only the asset, not net worth. Clear? And
better now.
Yeah. And we think, say for example, I want to give, I have a son and daughter. I'll give my business to my son. Then I'll pass away. And my daughter, he takes away my mobile phone. And she won't give the mobile phone or to share any password to my son. What will happen? My son cannot run the business properly because he can't handle my bank accounts. It has to go through the probate. It takes 6 months, 9 months, 12 months, even the multiple years to get the SIM of mine to his name. So digital assets I'm going to talk about. Who's going to handle your email ID, your mobile number? Who's going to handle your social media accounts? Trademarks, these are all assets. We need to plan for this as well. And I'm going to talk a little bit about business succession. Only 6% of the business stays more than one generation. That is 25 to 30 years is one generation. After that, another generation comes into on the earth. Why means because we all love our kids. Even if they are not interested in the business, we want them to continue our business. We force them to come to our business, but their aspiration is different. We don't understand what is business succession. Please, if you have a notebook or mobile, please note it down, this definition. Business succession means transferring of your power. If you're not there, who is going to make that decision? Who is going to take that power to make that decision in your business? That is called business succession. And what is inheritance? Inheritance means transferring of your assets. Inheritance means transferring of your assets. Business succession means transferring of your power. If your kid is not interested in your business, you can do the inheritance planning for your kid. And for the most performing employee or capable person, you can transfer your power for making the decision. That is succession. If you know just this difference, you can plan your business succession beautiful manner. Again, in this, some more case studies like my daughter is smart, my son is not good, or else all my son runs the business and my daughter gets the 50% of the profit, even if she is not involved in the business. All these things, we have a plan for that. Estate planning is not one person's job. We need to involve as a team. Like I need to involve the tax planner, risk planner, estate planner, structural engineer, corporate financial planner, asset manager, estate planner, accountants. All these people we need to involve while doing the estate planning. The estate planner job is to structure your assets properly. The lawyer job is to draft it in a well manner. And financial advisor's job in the estate planning is to create a liquidity whenever it is required. Like that, every person's job is defined. You need to involve everyone. The main person you need to involve is the estate planner, like us. And we will involve all the team members, or else we will work with your existing team as well. I've authored 4 financial books. All book profit goes to the Rotary. One is Build Your 21st Century Financial Plan, the investment guide for entrepreneurs, the tax strategies for business owners, and how the rich use life insurance as a plan B and add economic stability. I have incorporated Rockefeller's method, how to integrate the life insurance with the trust to perpetuate wealth forever. That concept I've written with the latest book. Setting up a smooth estate planning isn't as hard as you think. It takes only 2 to 3 months to set up all your basic structure. And every year we need to keep reviewing to make the latest changes in your estate planning. So that's all for today. Today's session was only the essence of intergenerational planning, to introduce you to the many aspects of estate. That was the objective. Thank you so much.
Thank you, Sandeep, for this informative and interactive session. A lot of things I didn't know. I'm sure Ashish knows, my husband knows, but I didn't know. So it was really, really informative. The book tea table book is there on the chat if you want to talk about it.
Yeah, I've created one in the Rotary. I'm a chairman for the tea fellowship group. So that's why instead of making it as a coffee table book, I have written as a tea table book. So this is my profile. You can just go through it. You will come to know who is Sandeep, what is my expertise, and I have created few very good case studies also for you to go through it. Thank you. And we are open for a Q&A. If you have any specific questions, you can feel free to ask me.
So just before that, everyone, the book, tea table book is in the chat. So you can just download it if you want to read more about Sandeep or asset and estate planning. Thank you.
Hello.
Hi, Lily. Yeah, we can hear you.
Yeah, Lily. Yeah, so good evening, everybody. Thank you so much, Sandeep. Very interesting. I missed the first 10 minutes of your talk. Just wanted to ask you one question. My daughters are in UK, and UK law, they have just passed, I think, new laws. So have you looked at them? How briefly, would that affect? Because I have property in Mauritius that they would inherit, in the future. Is that going to affect?
Yes, the many rich clients are moving from UK to Dubai nowadays, because the UK, the new changes to the trust as impacting their tax planning. In the UK, it is a 40% inheritance tax. we need to know the difference between the estate tax and inheritance tax. In the US, we have a estate tax. In the UK, we have an inheritance tax. Not both are same. Okay. What is estate tax means? The person who is transferring the assets to the next generation is going to pay the tax, then it will be transferred to the next generation. But in the UK, it is a reverse. Say, for example, I'm your son. You have a properties in the UK. I need to pay the taxes first, inheritance tax, then I need to inherit. So in the UK, a lot of private lenders are there. They charge like per week 1% or 0.5%. They will lend you the money for 2 to 3 months so that you can pay the taxes to the government and inherit your wealth. It's a very big business in UK, the private lending business. And UK is no more, it is a tax favorable country. Many people are going to the Cayman Islands and Dubai.
So how about the property I have in Mauritius, which my daughters will inherit in the future? Would there be inheritance tax on their property in Mauritius that they would inherit here, or it's only applicable to property in UK?
So only in the UK. No,
okay,
no,
fine.
but if she is going to inherit it from the Mauritius also, she has to pay the tax.
Okay, so there would be inheritance tax on the property she has inherited. Like I have my house now, so one day my children would inherit. So they would have to pay inheritance tax.
Because she's not the resident of Mauritius, she's the resident of UK.
Okay. Right.
Even the Indians, if your kids are in UK and you have assets, you need to transfer to your next generation. They're settled in the UK, they need to pay the inheritance tax.
Is there any way to plan for that for the future?
Yes, we do the asset structuring. We need to set up a company in the Dubai as a parent holding company. And we need to create a, that parent holding company will own the assets in the Mauritius.
Okay.
So this inheritance tax is applicable to the individuals, not for the company.
Yeah. Okay.
So we need to move to the trust. We need to move to the parent holding companies so that the Succession Act or Inheritance Act won't be applicable. And I work with the few Mauritius, the insurance company. Very few people knows about this. We call it as a private placement life insurance. This private placement life insurance will hold the parent holding company in the Dubai. And that parent holding company will hold your local assets.
Okay. But can it be done from a company which is in Mauritius?
Yes, we can do it.
Yes, it can.
That I've covered in my book, which is attached in the chat. Please go through it.
Thank you so much, Sandeep.
And I want to cover one more point. If any other questions, please do ask, or else I want to cover one more topic. Okay, now I'm going to cover one more topic. It is related to Ms. Nili's question as well. While transferring your wealth from one generation to the next generation, the wealth shrinks. Wealth disappears bit. Why? Whether your kids are stupid or smart, your wealth shrinks. Why? Anyone would like to answer? While transferring the wealth from one generation to the next generation, the wealth shrinks irrespective whether your kids are smart or stupid. Why wealth shrinks?
Because of taxes?
Perfect. Because of the 3 taxes. One is capital tax, capital gains tax, gift tax, and estate tax. Because of 3 taxes, your wealth is destroyed by anywhere between 40 to 60% in first generation, second generation, another 30-50%. And
what about, Sandeep?
Yeah.
How about when you create like a Hindu undivided family or something like that?
See, in the HUF, the problem is as long as you are alive, please go for the HUF. And near to our mortality, we need to dismantle the HUF, because moving assets to the HUF is very easy, but taking out outside the HUF is very difficult. Say, for example, now when I become 70 years old, I have 2 kids, and those kids would be having another 2 kids. So I have 10 people in my family, 8 to 10 people. And if I want to remove one asset from the HUF, all the family members has to sign. If one person says that I don't want to sign, then it becomes very complicated. Do it for the tax planning only till your lifetime. And if it is financial assets, it is okay. It is easy to distribute. If you have a property, it is very difficult to divide one flat into 10 pieces. Very difficult. So I do not recommend HF for a very long time.
Okay.
So any other questions? Abhilash, I covered everything on time. I have that habit.
Right, I am so happy. Yes. So if all the questions are done, we will vote of thanks. Amal sir.
Thank you, President. Distinguished Rotarian and guests. Good evening, or should I say good night, as I believe it is around 9:30 in Bangalore. In Mauritius, it is already 8. In fact, I am Amal, Project Director of the Rotary Club of Montebello. First, I would like to express my deepest gratitude to our sister club, Rotary of Bangalore Lakeside, for organizing this wonderful meeting tonight. Indeed, this meeting has been very instructive. Thank you, Rotarian Abhilasha, President of Rotary Club of Bangalore Lakeside. I would also like to extend my thanks to Rotarian Pavan, President of Rotary Club of Bangalore, Whitefield Central, and to Rotarian Rampriya, President of Rotary Club Bangalore Skyway. A special thanks to our guest speaker, Rotarian Sandeep, for sharing his invaluable experience and knowledge with us. It was a very excellent presentation, direct to the point and clear. Intergenerational planning is a key aspect of legacy planning. It involves strategies for managing and transferring wealth across generations. Unfortunately, in Mauritius, we have witnessed families that were once very well off, but due to a lack of legacy planning, they now struggle for a living. All their wealth has been depleted. No planning. I can ask someone from the tax authorities. I am from the Mauritius Revenue Authorities. I can personally attest to the challenges families face when they are burdened with taxes owed by previous generation to unplanned legacies. Distinguished Rotarian, preserving family wealth is no easy task, but it is critical for the future generation. We must act now before it is too late. Once again, thank you, Rotarian Sandeep, for sharing your expertise with us. I would also like to thank everyone who worked hard to make this meeting possible. And lastly, I want to express my gratitude to all Rotarians from Rotary Club of Montebello for their presence tonight. Thank you, everyone. God bless you all. Thank you.